Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Communicate with clarity. Communicate with others as clearly as you can to avoid misunderstanding, sadness, and drama. If all humans would communicate with impeccability of the word, all our relationships would change. There'd be no wars, no violence, no misunderstandings. That might be pushing it a bit, folks, but clarity, truth is where it's at. Market-wise, let's take a look at it out here. We had the Dow Industrials close down 551. NASDAQ off 119, S&P's off 56. Gold contract down $2.80, trading at $12.22 an ounce. We had silver down 11 cents, $14.29 an ounce. Light sweet crude, that's the number, folks, big number. Down 382, trading 53.28. Light sweet crude, ABC structure on the way down, 45 bucks coming at us. It blew out the B point today, had the volume behind the move, folks. Big numbers. Notes and bonds, 10-year note flat, 119.08. 30-year up 5 ticks, 139.30. They both are over their October swing highs. I expect you're going to see a higher price, lower yield in the note and bond market. King dollar. King dollar got back over its August 15th swing high. You're up 639 ticks, trading 96.705. 96.450 is the number to keep your eye on in King dollar. We'll see whether, we went over there twice. Both times you came back inside that area with huge volume. This is the third time we're over it again, and guess what? You're over it with light volume once again. Euro. The euro is trading 113.69 to 1 US dollar. The yen is out here at 112.70 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you get? Well, we're getting closer and closer to this high volume this February 9th high volume swing low, folks. When you take a look at this, we put this on a weekly. In the SPY, that number is 252. 3 weeks ago, we get down to 258. This morning, we get down to 263. You're closing at the lows of the day, and this is going to be dangerous just in the texture of closing at the lows of the day. Coming into a holiday, what you had last night is that we had the NDX 100 jump the creek. It looks to me like the SPY is going to be the culprit tomorrow morning, jump of the creek. The reason being is that your last high volume low is 259 in the SPY. We closed at 264. I can see the SPY opening tomorrow, down another $3 at the open, just hammering into that 259. If we go over and we take a look at the NDX 100, the 3 Qs, you'll see what we're talking about when we say jump in the creek. What the Qs did yesterday is this. The low that was established out here on the 29th of October had been 160. We closed yesterday at 161.54. Bottom line, the Qs opened today at 158, and we closed at 159. That's a jump. And what you do have inside the NDX 100, the number to keep your eye on there is going to be 150. We've hit 157. Yeah, 157 thus far. 7 points is nothing now that you've been down this low. Because the amount of volume, by the way, also, that we've come down with is pretty extraordinary. I mean, they're taking no prisoners on the way down here. Big numbers. The Qs in particular. So picture the high volume low on a monthly basis had 1.1 billion shares. Well, we came down last month on 1.8 billion. This month we've already done 854 million. So it's a monster number, and that saying that this month also is going to have higher volume than what we're going into, and that's problematic. It's problematic in a big way, because what tends to happen is that if you are coming into a high volume with high volume or higher volume, you're going to blow that thing away. If we do take a look at the XLE, oil got hit big time today. XLE hammering into its last low. The last low was out there, 64.37. We hit 64.46, and we did it with more volume. That means that we're not done on the way down. What we did do today in the indices, now this is pretty hard to do in the aspect that you get a holiday week. I mean, it should slow up tomorrow, but in the indices, we came down with expanded volume. We did inside the NYSE, we did 1 billion shares, 1 billion. Inside the NASDAQ composite, we did 2.6 billion. Now, the 2.6 billion, you're going into 2.9. 2.9 is the most we had, and the 2.9 is not the most we had. The most we had at one of these lows. The 2.9 is at the, oh, interesting. Yeah, no, that was the low that was just established 3 weeks ago. It blew that one away. It closed below it, actually. The low of 4 weeks ago was 69.22. We closed at 69.08. You know, so hey, listen. You know, inside the composite might be game tomorrow for the 66.30 number. That's down. That'll be down another 270 points. We went to 68.30 today. You know, so that is a reachable aspect. Some of the higher volume equities in this market, and we did have volume in this market as we went into lower price. You had Microsoft down $2.90. Apple, big bite out of Apple, down $8.88. Nvidia, dead cat bounce. That was up $4.35. We had, let's see, Netflix was down $3.62. Let's go to Netflix, NFLX, and let's see what's happening with Netflix out here. Yeah, big number. So Netflix is off a high of 428 or 266. Man, what a hammer this is, man. Yeah, you're at 266 and 221 is game. Another hammering out here today was Bitcoin. Bitcoin in 5 days has gone down $2,000. Right now, Bitcoin's trading at 44.17. And what's pretty wild here, folks, is this. Not that, you know, there's really not a correlation, but that, you know, what we did have is that Bitcoin also had established that low at 5,900 in the same week of the high volume lows that are in the market, meaning the February 9th. Then it went above it. It built cause to go downtown from February right until last week, and then just blew it away. And it looks to me like Bitcoin, man, Bitcoin's got 3,000 coming at it with 1278 coming at it. 1278. Stay right there, folks. Come right back.